maybe a little bit of an introduction. I'm head of strategy and DeFi at Qivalis. I already mentioned we are a consortium of today 12 banks. We have about 200 million customers in total, and we are an open consortium that will enable more and more banks to join. I think by the time we go live, sometime around end of summer, we will probably have a few more banks. I cannot say which ones yet, but what we are building is something that is quite close to my heart, which is the fact that the euro is invisible on-chain. If you look at what's going on DeFi protocols, you see that the risk is completely concentrated on USD-denominated assets. And of course, that's a problem if President Trump suddenly decides that he's going to completely flip his opinion, also known as the taco trade. Then there is a big issue for protocols or for DeFi in general if you are depending so much on the policies of a very erratic country, right? So we think there is an opportunity out there for us to bring European values on chain. What does that mean? This means we want to bring a stablecoin which is open, which is secure, etc. Because we see that there is a big potential out there, and we think our European currency simply cannot afford the risk of missing the train in this fast-growing segment of the global finance industry. So why do we think that DeFi should care about us or about this effort that Europe is doing? The first problem that I mentioned is because of the dependency of DeFi protocols on USD-denominated assets. This single currency concentration is ridiculous from my point of view, 99%, as I said. I think it's not optional to manage that risk. It's an imperative that we start giving alternatives so that protocols like lending protocols work more efficiently and perhaps with a little bit less risk. The other point is the regulatory tailwind that we're having in Europe. So up to a few years, I think the central bank was not really happy about seeing all these stablecoins moving around. I think the conversation is starting to change now. The Bundesbank in Germany, for example, has openly said that they support the issuance of euro stablecoins. Banque de France is also very, forward-thinking in their approach to blockchain. And we think that this is going to continue. The Luxembourg government just yesterday issued an announcement that they fully support the development of a common European stablecoin. So we think regulators and governments are already on board, and they think it's important and necessary that the euro is present on DeFi. And this gap is also the opportunity. So what we think is once we are live, we will really very much like to work together with builders so that they take this opportunity and build over this gap in the market. So it's important to also say we are not a bank. We are a consortium, which means Qivalis is set up as a completely independent company. We are an e-money institute in Amsterdam. We have completely independent management from the banks, which means that gives us the liberty to decide, okay, for example, we're going to issue significant liquidity at DeFi protocols. We are going to work with builders. We are going to support them for them to adopt the euro on their protocols. As I said today, we are 12 major banks. More will be joining. We are working with them, with those banks, so that they understand, for example, that they could or should integrate DeFi offerings into what they already are building for crypto trading or for their wallet solutions, because we think that's going to bring instant value for their customers. We target to go live by second half of this year, depending on when the central bank in the Netherlands gives us the license. And this is what we bring to the table. First of all, we bring institutional depth liquidity. So we are, as I said, a consortium of a few globally significant banks, a few major banks in Europe, and so on and so forth. So we have access to very deep liquidity, which I think is not something that we have seen in the euro space so far. I mean, we have Circle, of course, with their EuroC stablecoin, but even them, in that case, the liquidity they have is basically negligible compared to USD liquidity. So we are bringing euro liquidity on the table. We are going to bring it to decentralized platforms like Ethereum. We're going to bring it to permissionless protocols. I will not say which ones, but you can probably think which ones are going to be. We're going to issue liquidity not only against other fiat currencies, but also against ETH, against Bitcoin, and so on and so forth. because we think there's appetite out there to have an exposure to those assets, but denominated in euro. This is an open architecture, as I said before in the panel. We do believe in open source. We do believe in collaborating. We are not going out into the market and saying we're going to destroy all other stablecoins because that's ridiculous. We want to work with them. We want to establish common liquidity pools, for example, with other European issuers. And we are also thinking about developing tooling or infrastructure with DeFi protocols together. Some of the things we are looking at are, for example, centralized exchanges, decentralized exchanges, AMMs. There are a few things where we think we could probably have better solutions than what we have today. We will start with the typical concentrated liquidity for capital efficiency on Euro USD or Euro ETH pairs, but we are also talking to some of these AMMs to see how can we integrate them with more institutional grade liquidity provision, so stuff like RFQs and so on, so that these decentralized exchanges can also serve institutional grade transactions, because we do believe that's going to come. If you see what the banks are doing, they're issuing tokenized money market funds on Ethereum, so you probably are going to need some kind of trading infrastructure for such tokenized real-world assets. And you're probably also going to need some infrastructure that supports transactions of 100 million, 200 million. Probably not going to work with the typical AMM pool, so that's something to work with the builders together. Then we have integrations with lending protocols. Here we are also thinking about, okay, so how can we bring more interesting treasury strategies on-chain that banks could use? So not something chasing the highest yield available, so more about how can I bring a treasurer of a major corporate in Germany on-chain to use one of these lending protocols for treasury optimization, optimizing these lending vaults together with the protocols, and building these routing pools, because we also think it's important for people to have a way to move from the euro towards another fiat, or from this fiat to us. We are working with consortia in Japan, in Korea, in the US, because we think that's going to be an important part of this new economy, to have on-chain FX. And we think DeFi is going to become the engine of this new, let's call it renaissance of the euro on-chain. It's not an afterthought. We see this as the foundation for our strategy to bring the euro to relevance on this new economy. So the first step is we're going to work with global exchanges to have fiat to stablecoin on and off ramping. Obviously, our banks are also going to provide this, but you know how banks are, they don't work so fast. So at the start, we are going to need also exchanges. We are talking to the major ones. You can imagine which ones. We're going to see liquidity at the centralized exchanges. As I said, we're starting at Ethereum. We're talking to the most relevant ones out there. If you think there's any particular protocol that we should look at, then feel free to contact me after the keynote, because we are very keen on understanding the ecosystem, understanding who we have to work with, where is the demand, and so on. Then we will activate lending at particular protocols, the biggest ones, of course, in Ethereum. Because we are talking to people like hedge funds and corporates who are telling us, okay, if you give me a chance to use the euro in one of these protocols and I can move my treasury on there, then I'm the first customer for your banks. So obviously it makes sense for us to onboard this kind of assets there, right? So this will attract minting, we hope, once we have this yield engine going on. It's probably not going to be like 20% or 30%. It's going to be a more conservative. But we are not targeting the degens who are chasing yield. I think they are better served with other protocols, right? We are targeting more, the builders who are thinking more long term. So this yield is not going to be something mind-blowing, but still going to be significant, I believe. We plan to bring institutional volume on chain. That means we plan to bring tokenized money market funds, tokenized bonds, and other forms of security on public chains, and establish liquidity against our stablecoin. This probably will lead to more integrations, and in the end, what we hope is to have banking adoption so that when you're a customer of one of these 12, 20, 30 banks, you can just say, okay, I want to open one more account that is going to be on stablecoin, and this allows me to on and off ramp very simply to Ethereum or another chain, we will see. to get access to all of these value-adding propositions on-chain. So yeah, I think this institutional DeFi concept is also not new. It's something that everyone has been trying to do, right? So we know there are some lending protocols that are going to launch a new version soon that they say is going to be institutional grade and is going to onboard, banks and hedge funds and whatever. But there's still a lot of work to do, right? So this conversation we had previously about collaborating with builders is also important for us because normally what we have seen is that protocols are developing something that they say is institutional grade, but they are basically building what they think institutions want, right? Which is probably not the same like asking us. So that's one point that we want to make. If you are building something that you want institutions to use, then come to us, because we can co-design this together. We are not against DeFi. We are completely pro DeFi. And this means also that we would like to have this conversation going on. So we see three treasury strategies that people want to use on institutional DeFi. One is the US Euro carry trade, because there is obviously some opportunities there because of the difference on the interest rates between the US and Europe. Euro leverage strategies, if you're Euro long, then you will probably also need some kind of Euro exposure for that. And treasury diversification, when we talk to corporates who could use the stablecoin to move money between Argentina, Brazil, Europe, Africa, Hong Kong, they tell us, okay, I could do this on the typical SWIFT network, or I could do this on the stablecoin. But if I do it in the stablecoin, then I also want to get some yield out of it. And this you can only do if you can, instantly go in and out of yield-generating protocols, which hopefully will be provided by DeFi builders on an institutional grade. And we think once we establish this ecosystem and once we have, let's say, €1 billion moving around, we will probably also start working towards a global settlement token. So our vision is not to replace SEPA Instant or all of these European payment networks that are out there, because that makes zero sense, right? The payments system in Europe is very efficient, and we don't think we have to replace that. We are thinking more in terms of global demand. So if I have someone in El Salvador or in Argentina or in Mexico or in Hong Kong or in Singapore or whatever, who for some reason wants to get some Euro exposure, they should not be jumping all of these hoops on the traditional market. They should instead just access it on-chain. And that's where we think the big demand is going to come. We have already validated this with some people, as I said, in Hong Kong, for example, where we think there will be some interesting consumption of our stablecoin in the beginning. And we hope that once we have a proven track record together with DeFi, we might have a chance to establish a new or another alternative global settlement token instead of only the typical US ones. So where are we today? We have started the consortium in October. We are now allowing more banks to join before we go live. We hope to get our license ready by end of summer, as I said. And once we get this license, we plan to go live with all of these use cases that I have mentioned today, basically in parallel at the same time. And we hoped that by 2027, we can start expanding and growing the distribution network and so on and so forth. So I hope that people here in the audience will build with us. We're looking for people who can help us with protocol integrations, co-designing alternatives, market makers, liquidity providers, payment and settlement protocols, institutional participants, or anything else. If you think there is a chance or there is an opportunity for the Euro in your protocol, then just reach out to us, because we are really very, very keen on collaborating with the industry. And with that, I say thank you, with 8 seconds of spare time. So if you have any questions, please do let me know.